Thanks everybody for being here. Thank you for the intros. I'm Rice. This is Scooter. This was supposed to be a fireside chat with a third panelist, but he got called away. So just Scooter and I, and we're going to keep this conversational. We've got a lot of fun topics to talk about. So thank you all for being here.
Yeah, I think every Bitcoiner in the audience can understand real time. We live in a real time world, and things come up. We got to move.
It's a real time world. Got things need to be done. So, Scooter, we really appreciate at Gridmatic the partnership that we have with you and with Vega. I think it'd be really interesting for the group to understand kind of the genesis of our partnership, how we first got engaged, and then that could bring us up to the rollout of the Gridmatic AI Load Optimizer in May of this year.
Sure, happy to. Obviously, we're also, very, very thankful for, you guys work in the collaboration that you guys have put forward, and also the willingness to have a progressive attitude about embracing technology and bringing some differentiated value, differentiated products, a willingness to try, a willingness to test, not being afraid of a failure of something, and learning from that. So I would say, I think the origin of kind of the collaboration that we worked on, that allows for like financial and virtual optimization around flexible load, really was, like many things, was kind of a necessity, innovation born out of necessity, right? So for the better part of late 2023, early 2024, we had been working internally on modeling out real-time plus ancillary offers to kind of be in and out of the market and take advantage of the, mining flexibility, load flexibility, and also the higher values for the ancillary service market here in ERCOT. Now, it's a very delicate dance, because for anybody who doesn't know, the ancillary market here in ERCOT carries an obligation for you for your load to be available to be called upon by the system operator if and when an event happens, right? So most miners do not have fixed hedges or fixed blocks at this day and age, right? Legacy miners, legacy operations did. Forward markets were very, very different in 2021, 2022, very, very different than they are today. And so it's very difficult for a miner to take on such a fixed price obligation. It's fairly speculative. The only way that makes sense is if there's extreme volatility in the market. Over the past 18 months to 24 months, we've seen a tremendous erosion of volatility in the market. Good, bad, indifferent, that's the reality. And so we had identified an opportunity to automate nominations for ancillary service programs in certain hours, and not based upon like predictive pricing models. Okay. As soon as we were ready to kind of roll that out, and we actually structured some large contracts around this new method, right? As soon as we did that, we saw massive erosion in the ancillary service values, right? And so it just became a matter of like risk versus reward. This is not really worth the risk anymore, because we were modeling out picking up, anywhere from $4 to $7 a megawatt hour, depending upon the load zone that you're in. So different zones, as I'm sure everybody here knows, they have different price signals, different price settlements between the different parts of Texas. So we did that modeling zonally, and everything just eroded, just kind of completely collapsed in ancillary service markets. Moved over to ERS. Now we're starting to see that collapsing as well. And so when I'd met with Gridmatic company leadership, said, hey, this is what we've been working on. This is the challenge that we're seeing now. It's just math. It's just a probabilistic problem. And it's saying that it's not worth it to do. So what's the best next alpha that we can find in the marketplace for flexible loads. And so we kind of, the genesis of that conversation was moving it away from a physical obligation into virtual optimization around what's can be commonly referred to as a DART spread, a day-ahead real-time spread. Similar approach to kind of maxing out the nomination values, and that showed much more promise. And then you guys have a tremendous amount of resources in Cupertino, a tremendous amount of data scientists working on that, and so that was kind of the genesis of it. And I think we rolled that out in May I believe.
That's right.
Have seen great results out of it, and it really just unlocked another opportunity for flexible loads that other REPs had not, I don't think were capable of at the time, and certainly weren't offering it to the clients.
Right. Really appreciate that history. Super helpful. And I think you hit on a really important distinction of these physical ways for large flexible loads to operate in the ERCOT market. Physical being demand response programs, participation in ancillary service markets, versus the financial opportunities, right? And that's exactly what we rolled out in May and continue to grow that. And again, that's what we're calling the Gridmatic AI Load Optimizer. And it is something that is executed separately from whatever physical activities the large flexible load might be taking in the market. So what we do is we define a strike price, we define a P and a Q, a price at which we want to submit our bids, and a quantity at which we want to submit our bids. And then those are being, with our AI technology developed in Cupertino, submitted into the ERCOT market every single day. And these customers get a daily settlement statement, effectively, showing how those virtual trades performed in the market, and to what extent they were able to take advantage of that DART spread that you mentioned.
And the important thing is, right, it has to be easy for the end user. It has to be light to zero lift, right, for the customer, because they've got a million things going on. But I think I don't know if you want to hit on maybe some of like y'all's origins and kind of, as an operator, as a gen operator and battery operator, you guys have been, kind of doing this stuff. It's old hat for you guys.
Yes. Yeah. Thanks. I mean, I think what we're talking about here, using these advanced AI-driven strategies for retail loads, for large flexible loads, is it's just the next genesis of our technology. So Gridmatic began as a trading operation in 2019, again, based in Silicon Valley, Cupertino, California. And we were simply doing these financial trades for several years, and found out that the AI, our machine learning technology, was very advanced and was making, was profitable just trading financial electricity in ERCOT, but also in the other ISOs across the United States. The next way that we pushed our technology into the market was on the wholesale side. So we do operate grid scale, that's large battery energy storage systems in ERCOT as well as in CAISO, that's the California ISO, using the exact same AI technology. So the technology is assessing opportunities in the day-ahead market for these storage assets every single day, and it's making decisions of how many megawatts to place in different markets, right? So if it's a 50 megawatt asset, the technology may decide that tomorrow we should bid 10 megawatts in a regulation up service or 20 megawatts in a responsive reserve service. Those are just two of the different kinds of ancillary service markets that we have. But in ERCOT, I think there's like 5 different kinds of ancillary services. So it is, you hit on it earlier, it's really an optimization problem. It's a mathematical optimization problem based on forecasts that humans can do, right? Like we can do it in spreadsheets and a little bit of market knowledge, but I wouldn't want to compete against a machine that's been trained on this and is really has been proven very effective over the past 6 years since Gridmatic was founded. So now what we're talking about here with large flexible loads is just the next genesis. It's just the third phase of us moving our technology into the market. ERCOT is the perfect place to do this. It's a market that is, I think, it's structured perfectly for what we're trying to do, and the market opportunities. It's getting harder, right? You hit on ancillary services being saturated, prices being down. The exact same thing is happening to ERS. And I do want to credit the Texas Blockchain Council for highlighting this issue. They've touched on it recently in a very substantive way, and they're spot on. You know, ERS has historically been an excellent demand response program. Revenues have been stable since 2011 when the program began. And just right now, just recently, we're seeing those prices, just like ancillary services, go down, saturated in a big way, in large part because large flexible loads are now entering that market chasing profit, right? Like looking for the next dollar to make through demand side participation. And so the way we think about it is there is no way to seek out these opportunities other than using advanced technology.
Yeah, the market is working effectively like how it should, though. Yeah. I mean, wouldn't you agree? I mean, the more participation there is, the more volume that gets offered in, the lower your award is going to be. That is not necessarily something that is endemic to this energy market. Is just a market, right? If the more transactions you have, the more liquidity you have, the lower your trade width is, and then until something else new comes out, and technology is at the absolute center of it, right? There's this massive conversion, whether it is technology and innovation from the wholesale side, from a retailer like you guys, a retailer in QSC. I also, I'm looking out in the audience. I'm seeing guys like Medi back there, right? Wonderful technology from miner management and load control software. OBM is present as well. We have Luxor with their technological innovations going on. So it is a very rich space, because it's required to be a rich space, yes. Right? There's no real other way to capture profitability as a miner unless you are winning a technology race, and that goes all the way down to the chip level, right? Yeah. And I think I'm thinking about like 4 or 5 years ago when people were so excited about getting to like 30 joules per terahash, and now we're seeing insane efficiency, right? So it's hardware innovation, it's software, firmware, it's down to structural innovation as well. So the market is working. Yep. Now, what that means when something new comes along, I'm sure Rice was in the market when the last time we had an ancillary service introduced into the market, the Contingency Reserve Service, ECRS. And that ran people over when it first came out. Yeah. And so it's going to be interesting to see what happens to the market, what innovations are going to be pushed forward, because we have some market changes that are coming up. We do. And there's not a lot of substantive conversation about things like DRRS, about things like RTCB, right? So I don't know if you had an opinion, a stance, a thought, but sure. You've been in this market for a long time. So
yeah. I think you're exactly right. These markets are working exactly as designed. ERS is a great example. ERS in 2011 was spun up by ERCOT in response to a winter freeze event. That was February.
It's always a winter freeze event.
It's always a winter freeze. I know.
Cold.
That's right.
And that makes things change.
It's not supposed to be cold in Texas.
That's right. What happened?
So ERCOT spun up that program. It was a firm load shed event, February 2011. Wasn't anything nearly as bad as Winter Storm Uri, but I was in Houston at the time, and my neighborhood was without power for a couple of hours, and then they were able to rotate the outages, unlike Winter Storm Uri. But that's where ERS came from. So this was 15 years ago, long before we had large flexible loads like we do now. And that program has served its purpose. I don't see ERCOT reforming that program in a major way. That would just be a major effort and a huge commitment of people's time and resources when ERCOT's got a gazillion other things going on. So it kind of is what it is. And you mentioned DRRS. That's the Dispatchability, Reliability, Reserve Service that ERCOT is working to spin up next. So, to ERCOT's credit, they are always looking out at what else does our system need to support everything that's going on, from large flexible loads that are locating in this state to the massive amounts of renewable energy that have been built in this state, to now all of the grid scale battery energy resources that exist in this state. ERCOT's looking several years out ahead, and DRRS is one of these next opportunities for large flexible loads to participate in the market. It's going to be another tool in the tool belt, right?
What do you think about again, RTCB?
Yeah.
If you could elaborate on the acronym number
Sure.
one,
Yeah.
because we got a lot of abbreviations here in the market.
Yes.
REP, QSC, DRRS, ERS. It's just a whole alphabet soup, right?
It is.
So, what's your opinion? And I'll preface it with this, right? So, I want you to explain it for everybody, and we can talk about what potentially that means. For everybody that's listening, this program specifically is one that me personally, being in this market, there are people that I highly, highly respect from a technical market standpoint that are brilliant.
Yep.
And have such a different opinion.
Yeah.
Talking to one versus the other, what's going to be the impact? I don't remember the width of opinion about any other program than this one coming up. The market changes in 2 months.
2 months.
And nobody
December 5th.
knows what's going to happen.
Yeah.
Which is pretty wild and also kind of cool. That's pretty rock and roll.
You know what it reminds me of is when the market switched from zonal to nodal. I think that was December 2010. ERCOT has not undergone a fundamental reform like RTC plus B since then. And I remember, I was working at MP2 at the time. We stayed up all night till midnight watching to see what would happen when the market actually did flip from zonal to nodal, because it felt like this Y2K event, right? Like no one knew at 12:01.
Y2K call out. That's,
you like that?
Come on.
I know, right? No one knew at 12:01 on whatever, December 2nd or whenever it changed, what would actually happen with would SCED run properly. It was sort of a really interesting thing. RTC
Rice, what's
plus B.
SCED? That's another one. Come on.
SCED, Security Constrained Economic Dispatch. That's ERCOT's real-time engine that it uses to dispatch power plants every 5 minutes.
So Rice and I, for everybody, we were talking about, it would be a good idea. We just have like a definition, one pager, just hand out, because there's so much.
There's a lot.
We should have done that.
We should have done that.
But just
put it on the
fundamentally,
back of the name tags.
Fundamentally, like as we kind of get towards us, kind of wrapping up here a little bit, but like current world of ancillary service offers, right? Versus what's going to happen with RTC plus B.
Yeah.
Not your market outlook, but operational outlook, how things get offered, how things get, offered and removed. Maybe speak to that a little bit.
Yeah, absolutely. And I'll frame it as yet another way for large flexible loads to participate in the ERCOT market that they can't today. So RTC plus B stands for real-time co-optimization. And the goal...
And battery, that's the B.
Plus B. Plus B is for batteries. The goal is for ERCOT to procure ancillary services alongside energy in the real-time market. So today, they don't do that. They procure ancillary services in the day-ahead market, and they procure energy in both real-time and day-ahead. So real-time co-optimization, as the name suggests, is co-optimizing the energy and ancillaries markets in real time. Might sound simple from an implementation standpoint.
Does not sound simple at all.
Anything but simple. As a level 4 Queasy, we've been going through the implementation phases since, I'd say maybe June or July. It picked up in earnest, and it's a heavy lift. Like, think of all of the systems changes that the Queasies have to make, that ERCOT is making to their systems. It's a massive effort that probably is only rivaled by the transition from a zonal to a nodal market 15 years ago. So for large flexible loads, now you will be able to optimize amongst ancillaries markets in day ahead and real time, and the energy market in day ahead and real time. So it's going to open up this some other markets for large flexible loads to participate in. At the same time, it's going to open up more markets for Gridmatic and our technology to optimize against, right? And so we're all for that. We're going to be testing our technology in a new way that we haven't done yet. We're excited about that.
Well, and if I could maybe ask, because it's not just Gridmatic, right? As a retailer, and also like there's a connection, there's a bridge between what happens, and I don't want to get too far into the weeds with everybody, but like what happens on the retail side, how things are structured,
right,
versus what happens on the wholesale side, settlements between LSCs, that's a load serving entity, thank you. What happens on the back end from an ISO settlement level, like, and then a demand response strategy. Like, how important is it, again, not just for you, but for anybody out there serving load, and then participating in demand response, to have a cohesive retail wholesale relationship?
Yeah, I think what we'll probably see with RTC plus B is ancillaries prices decrease over time, because just like ECRS that you mentioned earlier, once the trend right now is when ERCOT opens up a new market, it gets saturated by large flexible loads and by batteries pretty quickly. Call it 6 to 12 months.
The people with a technology advantage.
Yeah, that's right.
It's
Absolutely.
No fault of anybody. It's just like
no fault of
if
anybody.
You have a technology advantage, you participate.
Yep.
For
and the more
value.
Exactly, and the more flexible you are, the more you can move into those markets and pick up market share. So I expect that absolutely will happen with RTC plus B, which for consumers, all of us, right? Whether we're consumers at the residential level or at a mining level, it should reduce ancillaries costs over time, because it's going to incentivize more competition to enter into that market.
See, everybody, this is what I'm talking about, right? Rice, super smart guy, been around for a while, been some great shops, had some great mentors. He's bearish. I talked to some really other peers and colleagues, very, very smart. They're super bullish. That's why it's an example. Huh?
That's why it's a market.
That's why it's a market, right? And a market happens at the mids, right?
Exactly.
And so it's fascinating to me that you have like a guy with such a resume, such a history like Rice, has one fairly steadfast opinion, and some other folks I won't name because they're not up here on the stage. And we're seeing those. It's not just an opinion. You guys have to price these things. You have to price outcomes, and you have to hold to those contracts, right? So it's not just about having a conversation and having an opinion. Money is being put where the mouths are, because you have to price these up in contracts. And for better or for worse, you write the contract, you have an obligation. So again, perfect example. He's very bearish. Some people are very bullish.
Very bearish.
Oh, okay, just bearish.
I'm somewhat bearish over a period of time.
What a cop-out, Rice. There was what did I hear? Somebody else, I think Nick Gates, I was on a panel with him. We were in the green room, and we were talking, and he was like, there's no bad trades, just bad prices.
Nice.
Right?
Yeah, nice.
So it's you're taking an easy way out there, Rice. It's okay though.
It's nuanced.
Y'all don't hold it against him if you see him. Right? He's all right. He's an all right guy.
I think to put a finer point on it, though, it's not getting easier in ERCOT, right? And the opportunities are going to be there for large flexible loads, for batteries, for market participants, but it's not getting easier. And I think it takes, great collaborative environments like this, right? Between load and gen, and regulators, right? Policymakers. Another thing I love about ERCOT is the stakeholder process, where guys like you and myself and large flexible loads can all sit there and have these debates. And so the future's bright in ERCOT. I do think that advanced technology is the only way to win in this market. I think that's been true for a while. It will be that one I'm certain about. I won't take a cop out on that one. Advanced technology will run this market in the very near future.
Well, I think we are up on our time. Yeah. So I think we're up on our time. If you have any questions, afterwards, I think we're coming into a well-deserved break for everybody. There's been a lot of content going on. If you have any questions for Rice and myself, please, feel welcome. But a wealth of knowledge. Thank you, Rice.
Thank you, Scooter.
For joining us.
Thanks for having us.